of LTIMindtree and L&T Technology. And he also spoke about, of course, semiconductors business. But since we're on the subject of IT, there are two brokerage notes on IT companies. The first one is HCLTech, where Macquarie has an outperform rating on the stock. It's a marquee buy for them, and they've raised the target price by 6%. Now, the key reason for the increase in target price is their margin expectations for next year and the year after. FY26 and FY27 have gone up. The reason is HCLTech's margins came under pressure for the last 2 or 3 years, from FY20 to FY24. And that's because of rapid expansion in their workforce. But now what Macquarie is arguing is that a lot of the incremental workforce has been the fresher hiring. So the overall cost of the employee will come down as the revenue starts expanding, and therefore in their estimates that FY25 margins will remain subdued, but in FY26 and FY27, aided by higher utilization because you've added on low-cost employees, freshers, their margins will expand. Kotak Institutional Equities has written on Coforge. They've initiated coverage on the stock with an ad rating. Their target price is at 6,000, and they're saying that strong growth will continue. They're factoring in a 20% EPS growth from FY24 to FY27, which is driven by about a 12% organic growth and some expansion in their margins. They're valuing Coforge at 30 times forward multiple, FY26. That said, even though they are anticipating, a 20% EPS growth, Kotak does believe the company's own ambition of hitting $2 billion in revenues and 150 to 250 basis points of margin expansion appears to be ambitious. There are some risks that they've also highlighted. One is key man risk. Now, a lot of the turnaround which Coforge has seen in the last last few years has been on account of, Mr. Sudhir Singh, who is the new CEO of the company. He came on board a couple of years back, and the growth of the company, saw a massive jump up. So there is a key man risk associated with Coforge. Two, close to more than 70% of their revenues come in from BFSI and travel, therefore high vertical concentration. Third, M&A integration related risks of Cigniti acquisition, because they've acquired Cigniti for its, the Fortune 500 clients, 28 of them. They need to integrate them well, make sure they can cross-sell to derive the synergy benefits from it. And fourth, now that Bearings is completely exited, they do not have a promoter, so you need to make sure that there are corporate adequate checks and balances, corporate governance standards are maintained in the absence of any promoter. So that's about, two IT companies, since IT is, one of the leading sectors of the day. But let's now focus on Godfrey Phillips. The companies in the company